Good evening, everyone. Time for another silver update. This is the weekly chart of Apple provided by netdania.com. You can click on the link below. This "you are here" pointer is pointing to 585. That's the after hours low hit in Apple Computer after a bad or supposedly bad earnings report. We bounced back after hours and were unchanged, but that's the low that was hit. You can see from this chart that anybody who is rational can realize that this is a bubble. It's going to crash. It's just a matter of time. Now you can see from the chart that you really only have support back at about 425. There's some intermediate support points right where we bounced off of, about here. And if we slice through that, we're going much lower. As you know, Google has rolled over and is going lower. And so these types of things tend to happen during the election season, where you have either the changeover from one president to another or the re-election of a president. But it's the sort of thing where they can blame it on the other guy or say it happened during a transition. So either way, no one has to take the blame. So it's clear from this chart that Apple is going to go much lower. That's my opinion, and I think that Apple will at least be cut in half. To be cut in half, we're going down to 350, and really support is all the way down here at about 200. So I think the Apple bulls eventually are going to throw in the towel, and this, as I've said before, you can't look at the fundamentals when you're looking at a bubble. As Jesse Livermore has pointed out, the news is going to come later. We don't know what the news is going to be. As Jimmy Rogers says, trees don't grow to the sky, and this tree is nearly touching the edge of the atmosphere. So it's going to come down. There's no question about that. The only question is what excuse they come up with when it does come down. But it will come down, and we're going to watch that more. Now, let's get over to the silver chart. We have some interesting action on the silver chart. It appears that we're making some kind of bottom, although we don't know for sure. We want to look at the MACD to see if we are rallying in a significant way, and you can see we have definitely turned up here on this 8-hour chart. We really can't see the lines because we have to draw a line from the very, very low price of $26 we hit here and draw up, and you can see that shows the breakdown, which gave us a sell signal here. But if we pull closer in, we can get a more defined view, and we can see we're definitely rounding up on the MACD. If we draw a trend line down on the MACD with this one and this one, then we're looking at the zero line as a crossover. We need to get through this zero line to establish some kind of bottom here. You can see that we are oversold at least back to July without retracing most of that action. So it could be a bottom. We don't know for sure. Then again, the deflation scare could continue. And on that topic, we want to look at the crude oil. They're definitely taking crude oil lower. There's no question about that. It's not really surprising considering it's pre-election. And just based on the technicals, you can see that we're right at about that trend line. We broke down, came above, and now are going lower. So we could get a significant drop in crude oil, and there's a lot of things that implies. If you've watched the gas pump, you've seen that we're down to just above $3. So that again seems to be a pre-election low. We don't know what we're going to do after the election. The other very important chart I've been watching is the cross rate on the Chinese currency. You have to remember that when you're talking about the value of the dollar, you're talking about a race to the bottom from all of the central bank controlled currencies, and we're going to get into the central banks and the BIS later. But you're talking about a race to the bottom from the central bank currencies that are all valued against each other. The Chinese, on the other hand, seem to be the odd man out in that they're not quite as willing to devalue their currency. So we've just crossed that 16-cent level I predicted when we were getting near this 15.9 cent level that we're going to break through, and we have. We'll see what kind of continuation we have on that. The other big currency is going to be the Japanese yen. You can see with the Fukushima low that we had here, and then a drop down, central bank intervention, and apparent central bank intervention with the Chinese announcing the printing of a lot of currency again. So will this rally last in the, Japanese announcement. Will this rally last with the Japanese printing currency? We don't know. It depends on their resolve. But again, it's a race to the bottom against all these currencies. And the key thing is going to be, what is silver and gold doing? And because those are the real determiners of what the value of a currency is. So before we get to the silver stockpiles, that's going to be the story of the night. We're going to look at the question of the night, and this is from JKI2S. Should I purchase junk silver? Hey, Brother John F., your site and YouTube videos are invaluable. Thank you for your contributions to the common man. I'm a modest silver investor and own roughly 500 ounces of silver bullion. Well, good for you on that. Really, honestly, you probably should be set with that. But anyway, primarily 1 ounce Maple Leafs and American Eagles. I have read that junk silver can be a valuable asset and should be added to one's silver supply. What is your view on this? And should I continue to buy bullion coins or purchase some junk silver? Any advice would be greatly appreciated. I welcome the thoughts of fellow members as well. Regards. Well, should I purchase junk silver? Absolutely, yes. Junk silver, in my opinion, and in the opinion of many others, is the absolute starting point. Junk silver is the best silver investment you need to start with. There are so many positives for this investment. I can't even list them all. My beginning investment in junk silver actually began in the 1970s. And it continued with accumulation through the 80s, 90s, and 2000s. But junk silver has a lot going for it. First of all, it is a very low premium over spot. It still is to this day. It's measured in bags. You can buy it in bags, but if you go to Amex, you can buy it in very small amounts if you want to. You can buy it as low as a silver dime. So there's no problem with small investors getting into junk silver. Also, junk silver is probably the least likely to be counterfeited. Yes, you can counterfeit a junk silver quarter, but it's just such a low profit margin. Or a junk silver dime. I've never heard of a junk silver dime being counterfeited, but they have a worn look to them. They have a ring to them. There's a lot of things about those. So I would say, although I can't give investment advice, I would say that from my experience, junk silver is a place you start. And for beginners, I would say that you can't go wrong starting with junk silver. Now, obviously, I've moved on to other things, numismatics, semi-numismatics, the official mint bullion, etc. But if you're just starting out, or if you have 500 ounces and you want to go backwards, I would say definitely you can't go wrong looking at junk silver. There's a very limited amount. You have to remember that we really don't know how much of the junk silver was melted in the 79, 80 high where silver hit $50. If you do a shadow stats or other inflation adjusted price, you're talking hundreds of dollars an ounce. How much would be melted at hundreds of dollars an ounce right now? Probably a lot would be melted and sent right back to the refiners. So we don't know how much is out there. There might be a lot less out there than you really think there is. So if it's still available and you're starting out, definitely junk silver is is a way to go. So let's get over to the main story of the night. That's going to be the silver stockpiles. And I wanted to start out first with a linked article on the last article I did from Jeff Nielsen on Bullion Bulls Canada. And this is about the stockpiles as far as the SLV and the ETFs. And I want to read this before we get over to the BIS data. So basically, we're going to go over this chart here. This is a rally in the inventories of silver, and Jeff Nielsen's going to explain how this is really fraudulent and how it has to do with counting the ETF stockpiles, which really aren't stockpiles, as we'll see. But let's read this here. As I have pointed out on many occasions, between 1990 and 2005, official silver inventories plummeted by approximately 90%. It is simple economics that any good which is grossly underpriced will be grossly overconsumed. Faced with the abrupt end to their silver manipulation, which would make it much more difficult to continue to manipulate the gold market, the bankers fell back on their oldest and most favorite swindle. They sold paper to people and pretended that the paper represented actual silver. Thus, the SLV was born. This is such an obvious sham that I simply lack the space to go until all the clearly fraudulent implications of this fund. So I will restrict myself to just a couple of facets. From 2005 to the end of 2008, after silver inventories plummeted by 90% in just 15 years due to being grossly underpriced, we are supposed to believe that inventories suddenly made a U-turn. There's your U-turn. And tripled over the course of just 4 years. Regular readers will be familiar with the following chart, which shows the progression of official silver inventories along with the small caveat attached to the graph. These official inventories include every ounce of ETF silver, and SLV, by far the largest silver ETF, was created at the beginning of 2006. As of the beginning of 2009, ETF holdings represent roughly 2/3 of official inventories. Anyone with even a slight understanding of market should recognize the obvious sham here. An inventory is the amount of a particular good warehoused and ready for sale. Conversely, the units of SLV and all other bullion ETFs represent privately owned silver, which has obviously been taken off the market. As a matter of elementary logic, it is impossible for even 1 ounce of silver to be both an inventory and an ETF. It can be one, silver for sale, or the other, privately owned, but not both. Thus, at the end of 2008, 2/3 of official global silver inventories were nothing but an obvious paper sham. Of even greater interest, I have been unable to find any more recent statements of official inventories. Apparently, the quasi-official consultant, none other than the infamous Jeffrey Christian and the CPM group who produced this data, has decided that it's better to simply hide all of the inventory data rather than attempt more clumsy shams of this nature. So Jeff Nielsen pretty much lays it on the line here. We can see that looking at this chart here, that 2006 was the bottom in the inventories, and of course really this line, if it were honest, would just go straight down to the zero line, because it was at the point where they created the fake silver ETF, where they claim that the silver in this ETF, which in my opinion doesn't exist at all, is being stockpiled, and that's when it goes up. So you'll have to read the rest of the article to get into JP Morgan's involvement, Barclays, etc. as Jeff Nielsen says, an obvious sham. So let's get to another obvious sham, and this is the very, very important article from Jason Hommel about how the BIS, this is the Bank of International Settlements, they're at the very center of the swirling controversy going on right now with Germany and others hinted at, talking about the repatriation of their gold. But even more important than that is the repatriation, or the existence even, of the physical silver. So this article goes into the BIS corrupt data. I'm going to read a little bit of this and then examine the data here. Jason says, the Bank of International Settlements has changed or revised their silver derivatives data in their derivatives report. The change took place between their June 2010 report and their December 2010 report for the period of June 2009. The change was from $203 billion in other precious metals liabilities changed down to $93 billion. The change took place in Table 22A, amounts outstanding of OTC equity-linked and commodity derivatives by instrument and counterparty in the category of other precious metals for June 2009. Notional amounts outstanding. In June 2009, the silver price was about $15 an ounce. So he goes into this, an obvious sham by the BIS. This is a central bank of central banks. So I don't have time to go into it, but Jason has managed to save the PDFs. I have the latest PDF here. This is the latest PDF issued by the BIS. But let's get back to Jason's pictures, his PNGs. He's taken screen caps of these reports, and I'll show you the very important data here. So we can see from the first one here that we have, this is the category we're looking at, other precious metals. And you can see that for the reporting period of June 2009, other precious metals was at $203 billion. These are reported in $1 billion. Now, if you think about it, $203 billion, do the math yourself, at current prices, that's about 8 billion ounces of silver. So remember, we're looking at June 2009 of other precious metals. Now, I don't have time to go into explaining why platinum and palladium are relevant to this. The numbers are so tiny. This isn't gold, so it has to be silver. So we're talking about $203 billion in silver. Now, the next report here, we can see we move forward in the reports, and we have other precious metals. That same period, June 2009, we can still see $203 billion reported. The next report from the next BIS report, and we can see here other precious metals, June 2009, we're down to $93 billion. So we've lost $100 billion in silver. We're talking at current prices at least 3 billion ounces. And the last one is, he's marked it out here, 93 billion. So not only has the BIS been dishonest about the amount of physical silver inventories that are held, in other words, other precious metals, but the BIS has actually changed the history. And if you know the sayings, he who controls history controls the future, we're talking about the altering of the historical data. So the BIS, the central bank of central banks, is altering the silver data. So we know these numbers are fraudulent. We know that the BIS data is fraudulent. We know that the silver stockpile inventory numbers and the silver ETF, the SLV, these are fraudulent numbers. So the situation in gold is starting to heat up. We know that Germany's demanding their gold. Venezuela's already demanded their gold. There's hints at other countries demanding their gold. But there's no silver to even be demanded because there are no silver stockpiles. The numbers are completely fraudulent. Even the BIS was bold enough to be caught boldly, bold-faced lying about their numbers and changing them overnight by $100 billion, which represents over 3 billion ounces of physical silver that has gone away, has disappeared, and we know that it's not physical silver, it's just a gigantic paper game. So the SLV is a gigantic sham, the BIS is a gigantic sham, and the only thing left is going to be stacking physical silver, and that is very cheap at this time, where you can buy it under $32, and you should stack as much as you possibly can before this gigantic sham is exposed. And we'll talk to you next time.